Hi traders, you're welcome back to the Forex Geek channel. The focus of this video is going to be on how to trade liquidity on a 5-minute chart using a reliable day trading strategy. So this is for traders who want to stop getting trapped and start understanding how smart money really moves the market. So, without further ado, let's just get right into it. What exactly is liquidity in trading? Well, liquidity is the fuel of the market. Okay, it is where large buyers and sellers enter the market, and institutions need liquidity to execute big orders. All right. But here's the truth: liquidity is found where traders place their stop losses, and such areas are usually uh, above equal highs. Wherever you find equal highs, you likely find liquidity above such areas. All right, above equal highs. Um, Below equal lows. If you find equal lows, that's also another zone where there is usually liquidity to be grabbed by the big players. Okay, you can see we have equal lows around here, right? Okay, and then apart from equal highs and equal lows, areas where liquidities are usually grabbed include at the edge of consolidation zones. So when you have a consolidation zone, usually you might find smart money interested in such zones. Okay, such zones, at the edge of consolidations. For example, you can see that in this particular situation, it looked as if price was going to break below here, but guess what? You can see that after grabbing liquidity, there was a spike to the upside, right? So it's important to pay attention to all these zones. These areas act like magnets. Price moves toward them because that is where the money sits, and smart money knows it. So now let's talk about how to spot them on the 5-minute chart. Okay, I've already showed a quick overview of these important zones, the equal highs and lows. Basically, there are two or more swing points at the same level. So these form clean, obvious areas where retail traders expect reversals and place their stops. If you enter a sell trade around this zone, you will likely place your stop loss somewhere above here, right? So that is for the equal highs. For the equal lows, if you enter a buy trade around this zone, you will likely set your stop loss around here, right? So that is the reason why these zones are areas of liquidity. Okay, liquidity pools where smart money likes to stop traders out and use their orders as liquidity to enter big orders. Now the next area of liquidity is the ranges or consolidation. Sideways movements before a breakout. Price usually fix one side before moving the other way, just like what happened here. So that is the liquidity grab. Okay, that's the liquidity grab. And then sometimes you might see wicks, wicks beyond structure. When you have a quick spike with no follow through, those are classic signs of stop hunts. Okay, in case maybe you see a wick just spike and then you see a reversal, it could be a stop hunt. So here's how it usually plays out. Price builds liquidity, okay, forming equal highs or lows. Then market makes a sharp move to break those levels. After these liquidity pools have been formed, price breaks a key or a key high or key low with a strong wick or a fast move. Then once such has happened, you should be looking for rejection confirmation. You watch out for maybe a bearish engulfing or a pin bar after a stop hunt above highs. All right, but that is if a stop hunt happens, because the fact that we have an area of liquidity around the particular zone does not mean that a legit breakout cannot happen. But now you can see in the case of this sell, you can see that we had a stop hunt. You can see that we had a liquidity grab around here. As price broke below here, you can see those that might have set their stop losses around here would have gotten stopped out. And guess what? This is the 5-minute chart. Okay, so you can see that the time frame is not exactly far away. Okay, this was 4th August, right? 4th August, and this is 5th August. So literally the next day there was a liquidity grab, and then 6th August, the next day again, that is 2 days after these two equal lows formed, you can see there was actually a breakout to the upside. But now in this particular case, this equal highs, the breakout in this case was actually a legit one. But those who would have thought that the breakout from this equal lows was legit would have gotten stopped out. So that's the reason why you should always get your confirmations, okay, before entering your trade. So you should look out for probably a bearish engulfing pattern that is for a bearish trade, or a bullish engulfing pattern for a bullish trade, or any other candlestick patterns that you can enter on confirmation. You can enter on the close of the confirmation candle, or maybe wait for a break and retest of structure on the 5-minute chart. Okay, then for your stop loss, just above the, let's say you get if it is a buy, if it is a sell trade, let's say you get a fake out to the upside, you can set your stop loss just above the wick of that candle. Okay, but if it is a fake out to the downside, then you'll be looking for a stop to be below the wick or below the lowest point of that liquidity grab. So probably if you are getting a confirmation of a bullish candle, a bullish confirmation, okay, this you can see we had a kind of a pin bar around here. So let's say we're entering a buy trade around there. You can just set your stop loss below the lowest point, and then your targets can actually be the internal range or opposite liquidity pool. So you can be targeting somewhere around here, and that's giving us a risk to reward of about 1 to 3. All right, so you can even decide to use a fixed risk to reward ratio. You can just trail your stop loss. So this strategy shines during the London Open, which is between 7 a.m. to 10 a.m. GMT, and the New York session, which is between 1 p.m. to 4 p.m. GMT. These are the high volume sessions when liquidity gets targeted most aggressively. Okay, so you want to avoid using this setup in low volume hours, because fake outs are more likely to fail. Now, it's very important that you observe patience, let liquidity form. Okay, don't anticipate the sweep, just react to it. And also make sure you add confluence like imbalance, order blocks or session highs and lows. This strategy can completely shift the way you trade lower time frames. So hit that like button if this helped you understand how smart money hunts stops and how you can position yourself on the right side of the move. Make sure to subscribe for more breakdowns like this with strategies that work in real market conditions. Thank you for watching. See you in the next video.